Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Shawn, Cruz, Manager of Trader Services at TD Ameritrade, to discuss Nasdaq-100 performance in front of Cisco Earnings, and kind of a mixed bag here today in the market, Shawn.
It is. I mean, you've sort of been bouncing around between slightly lower and slightly higher today. I think it makes sense. We just hit record highs. We still have got a few items that we're waiting to get more clarity on around COVID, what's going to be going on with restrictions at the state and local levels, and then also keeping a finger on the pulse of cases and the rollout of the vaccine. But as we're getting through earnings season here, it does seem like some of that uncertainty for the potential for larger moves is getting pulled off the table. And I would attribute that to why we're seeing vol Q really going off here. Even as we start to maybe hit a point where we could consolidate, I think getting through some of these earnings, we've gotten through Apple, Amazon, Google, Facebook, just some of those big names that are out there. As we get more and more of those earnings behind us, as long as we don't get anything jarring, I think that sets us up for, if nothing else, a consolidation at this level before we resume another march higher, presumably, depending on the pace of reopenings and how the COVID picture develops.
And Shawn, let's take a look at Cisco. What are you going to be watching?
Yeah, so if I'm looking at Cisco, it's going to be interesting to hear from them what they're seeing just in terms of corporate spending. They're always seen as being a good bellwether for what businesses are doing in terms of spending. And the transformation to digital, there was companies really rushing to get something done as fast as they could over the past year. But I think now you're going to see companies really start rethinking their spending and their infrastructure at a little bit more of a longer term outlook, and maybe a little bit more of a permanent change. And I think that can drive additional sales, or at least maybe the potential for some strong forward guidance. Looking at where Cisco is at, though, you see a pretty significant price level where there's a lot of volume that was going off right around that 44 level. And that was really where Cisco was chopping sideways for the bulk of the past quarter until recently popping out and moving higher. So right now it's trading up around that 48.60, 40.50 level. Right now the options market's pricing in about $2.40, give or take, in either direction. So you just kind of round that off a little bit and you get this anywhere between 48 and 51 price range for the stock to trade in post earnings. I would note, though, that the RSI, the relative strength indicator, had a pretty big breakout. It sort of makes you wonder if we are going to maybe see all the buyers or some of that optimism that we just mentioned already priced in. So maybe just keep an eye on maybe some of those support levels on any sort of a pullback. But I do think right now there's a general amount of optimism being priced into Cisco.
All right, Shawn, to wrap up here, if we take a look at earnings more holistically throughout Nasdaq-100, how has performance been?
It's been pretty solid, and we've got now 56 of the 100 Nasdaq 100 companies that have reported, so we're over halfway there. Seen a lot of growth out of the consumer discretionary sector on the sales and earnings front. Looks like industrials having a little bit more of a rough patch. Utilities had a little bit of a drop in earnings growth, but I would point out we've only heard from Xcel Energy as far as utilities components for the Nasdaq 100. There's still 2 more to go, but by and large, overall, we're seeing 20% sales growth, 21% sales growth, and we're seeing about 27% earnings growth. And that's why I pointed out, when you're starting to get earnings behind us, we're over halfway there. A lot of the major component companies have reported, and they're coming out reporting this kind of sales and earnings growth. I think that explains why you're seeing that vol Q number, that measure of implied volatility or uncertainty, really pull back here as we get more and more news from these companies. And I also think the other thing here is guidance. We haven't really gotten any sort of guidance that really causes us to feel very concerned about the future of these companies for the next year or even longer run moving forward. I think that's another reason. So far so good, and we've gotten a lot of the major components out of the way. We'll just have to wait and see what happens with the rest of the companies as we make our way through earnings season.
All right, Shawn, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.